Hey, what's going on, guys? So just doing a quick update video on the market. I'm going to cover what I'm looking for today slash tomorrow. And I'm also just going to do a quick update because we have a pretty interesting setup on both the daily and the weekly charts. Now, obviously, we have the Fed meeting coming up on Wednesday, probably the biggest meeting of the year, even though we pretty much know what's going to happen as far as rate cuts go for this meeting, i.e., we will not be getting any rate cuts. But what the market's going to be looking for is more color on that. We'll have to see what happens Wednesday. But let's go to the charts, and I'll show you what I'm talking about. Because regardless of what goes on in the world, geopolitical issues, anything, it will always show up in the charts. Um, so let's jump to the hourly chart. So this is what I like to use for kind of those. The way I like to put them is multi-hour trades. So a trade that we might hop in maybe later this afternoon and get out tomorrow, or maybe we hop in tomorrow morning and get out tomorrow afternoon, maybe the next day, perhaps. But those type of moves with the hourly chart. So if you watched my last video, I think it was a video. Maybe it was just a post, but I'll cover that. I said I want to watch this pretty much this 511 areas where I wanted to for us to kind of try to max out at, and we are pushing up towards that area again. Um, but let's look at the charts a little deeper and see exactly what we're looking at. As you can see, we're almost at that 511 area. If you look at the MACD, we have crossed bearish. We're not getting a huge dip off the MACD because you can see the market's really trying to push up a little bit higher. And I'll show you a little bit more of why that might be if you look at the daily chart. Again, the daily chart is going to be, what might play out in maybe the next few weeks, whereas the the weekly chart is something I'd be looking to for how things might play out over the next maybe few months or the next quarter or so. So if you guys have been following me, again, by the way, before I get into all this, like and subscribe to the video. I've put out some really good content. So please like and subscribe so you don't miss any of the content. I mean, the opportunities just from these videos alone has been, um, unmeasurable. So, and again, let's go back to our wave trend indicator. I've been kind of using this as like a gauge of whether we're going to turn or not. And you'll kind of see what I'm talking about here. So when we get to extremes here, you can see what happens. So we're at extremes here, right? This is back on April 19th ish. We went to extremes, okay? Our RSI was at extremes. You can see it's at 29 here. And our MACD crossed bullish, okay? So what happened? Over the next few hours, we bounced. We bounced hard, okay? We went all the way back up to extremes, and you can see we sold off. We got a Q trend sell, or we were back at extremes on RSI, and this is the place. So we played this bounce here, then we played this short here. Okay, we played this short here, all right, and then we came back down again, right, and we got to extremes again. RSI again was at extremes. Our MACD crossed bullish. We got a buy indicator on our Q trend. And look how hard we bounced there. Now, we are almost, as you can see, we're almost at extremes again here. We're almost at extremes on RSI. and our MACD has indeed crossed bearish here as well. So what I'm looking for is, in a perfect world, we push a little bit higher and actually get two extremes on both the RSI and the wave trend indicator. And if it does happen, then that's where I would look for an entry. Now, it obviously does not have to get to extremes. We could just start selling off here. In that case, we may miss an opportunity. I'll have to revisit that when that happens. If we actually do turn down and start dropping, we may enter there. But again, that's probably not going to happen until probably post market, or maybe later in the evening, or possibly even pre market tomorrow. So not a whole lot has changed in the last day or so since or my last video. We've kind of been just going around this area here from 508 to 511. So we've kind of just been dancing around a little bit. We are pushing a little bit higher, and that's what I'm looking for. In a perfect world, we push a little bit higher, 511, 512, and then top out around there. Our indicators will both be at extremes now. Our MACD will cross bearish. We will eventually get a Q trend sell signal here, and that will be our sign to go short. When we get that Q trend sell signal, it's going to be like, okay, you might be missing the bus here, and we may, in that instance, then go short then. But we'll cross that bridge when we get there, because we are very, very close to those extremes. So again, that's what I'm looking to happen for over the next few hours. So think to the rest of the session today, probably not during the session, but, post market, maybe a futures play later, or it may set us up nicely for a short tomorrow. So that's what I'm looking at for today, tomorrow. Now, what I also want to go over, I want to show you, because it's kind of a rarity, I guess you can say, where you have such a stark difference with the daily chart and the weekly chart. So if you look, our daily chart is looking pretty bullish here. So let me just kind of zoom in and get a better look at this chart for you here. Maybe turn off some of these indicators. Kill this one. Okay. So the daily chart, as you can see, we as far as the wave trend indicator goes, we had been dancing around at these extremes forever, and the market just kept going up, and that's why you never want to go off any one indicator. Okay. We just sat at extremes, and if you look at that, we sat at extremes for months. Again, this is the daily chart, but we're talking about like 3 months here. That's a fucking long time. So now again, we did, again, our MACD crossed bearish, really it crossed bearish somewhere around here. But we didn't, again, that's why we don't trade off any one indicator. Let me make this RSI divergence indicator a little bit bigger so you can see a little bit here. So you can see we didn't actually start selling off until our RSI really started pushing down here, and our wave trend indicator started pushing down. So that's that's what we'll look for when it comes to the short side next time on the daily chart. But as you can see here, we got down pretty much to extremes here on the wave trend indicator, and as you can see here, we're looking to bounce here in the short term. Our wave trend is at extremes. We crossed bullish. Our MACD is about to cross bullish here. We'll get a buy trend here, on a buy signal on the Q trend here very shortly, probably this week, if things keep up. And I do expect a bounce up probably back up to this 525 area if things do end up playing out here. Or possibly higher. So again, that's the daily chart. We're looking very bullish here. It's set up to be very bullish. If you even look at the 4-hour chart, you can see it's already starting to play out here. Um, so that's where we're at with the daily chart. It does look very bullish. However, now if we go to the weekly chart, here's where you see that stark difference that I was talking about, okay? Now, the weekly chart, again, this is what I'm looking at to play out over the next few months, okay? Not the next few weeks like the daily chart, but the next few months. So think the next quarter, maybe going into spring, summertime. This is what I'm looking at, and it looks very bearish. We've fallen out of this uptrend that we were in. We got our Q trend sell signal. If you look at the MACD indicator, we have crossed bearish. Our RSI was at extremes, and our wave trend indicator is also here at extremes. So the weekly chart does look very bearish, and if you can see what happened last time here on the weekly chart, where we were at extremes, our MACD crossed, and our RSI started to turn down here. And look, it's kind of doing the same little move here, right? And this is kind of what I would probably expect, like with the daily chart. Remember I said we might jump up 20 points. So here we're at what? 434, and we jumped up to 454, 20 points. Guys, the market always repeats itself. Not always, but realistically, pretty much always repeats itself. All right. It's just patterns. Okay. So we're just picking out patterns and watching them play out all over again, except this time we're going to be taking advantage of that pattern. So where you see this bounce right here over a 1, 2, 3 week period. Remember I said the next few weeks with the daily chart? I could see that happening we had a bullish week last week. I could see us bullish again maybe this week and maybe next week. So somewhere around that type of bounce is what I'm looking at. And it doesn't look a lot, but I mean, again, that's a 20-point bounce there. I'd be looking probably for something similar. Like I said, we're at 505 on the SPY, somewhere around 525 ish. Would be a pretty nice top and a pretty good entry on a short to me, a longer term short. So it's important to be patient and wait for these proper setups, and play the moves in between too, because again, this is the weekly chart. We're looking at what's happening over the next few months, but we can still take advantage of what's happening today, or what's happening this week, or what's happening today, what's happening over the next hour or so, depending on obviously, what your trading plan is and all that stuff. But there's always patterns within the patterns within the chart. So that's what I'm looking at in terms of the weekly chart and the daily chart. So weekly chart looks bearish. So over the next maybe quarter, maybe even longer, maybe 6 months, 3 to 6 months, maybe could be looking very bearish, and that lines up with the market was thinking we're going to get rate cuts this year, and now word on the street is we may get none. When the market is planned for 3 or 4, so it's all going to come out in the wash over the next few months, in my opinion. That being said, again, you have your bullish setup on the daily chart. That's going to play out before the longer term weekly chart picture is going to play out. So you get those small bounces like this one. And I'll even go so far as to show you what I'm talking about with this bounce here. So this was the week of July. What is this? July of 2023 to August. So pretty much August of 2023. So let's jump on the daily chart. I'll show you exactly what I'm talking about. So is this? Yep, right here. So I could just point it out right on the chart without even looking at the dates because you can really see. So this looks like a much now when you zoom in, this looks much more substantial of a drop. Or I'm sorry, of what did I say? August with a bounce. So July. So here's July. Here's our drop, and here's our bounce. Okay. So this is as you can see on the weekly chart, yes, we're still heading down, but this bounce is substantial. Okay. So again, I said what? From about 433, 435 to what did I say? 450. So 20 points, 433 to 453. Okay. So that is a substantial bounce on the daily chart. It didn't quite have the same bullish setup that we have at the moment, but you can see it has the same characteristics where the MACD crosses bullish here. RSI, again, was not at extremes, quite at extremes. It was almost there. Same thing with wave trend, but we crossed bullish and we did get our bounce. So we have a even stronger case for a bounce on the daily chart right now, even more so. So I could even see us jumping potentially even more than 20 points, maybe 20 to 30 points before falling back down in the longer term. So yeah, so that's pretty much what I'm looking at. Again, guys, if you ever want to know what the market's going to do in the future, all you have to do is look at the past, okay? Because these patterns continue to play out over and over and over and over again, and it's just a revolving door. And what it really does is it shows in mathematically, chart wise, it's just a representation of what really, because big money really leads the way with all this, what they do with their money, where they're taking profits, where they're buying, where they're selling, and as you can see, there's you have these swings that you can take advantage of. So yes, the longer term trend, in my opinion, is now in a downward trajectory, but we will have a bounce over the next, week, maybe 2-3 weeks, something like that. So that's what I'm looking at. That's where we're at, and as you can see, this is where we're at now. And actually, yeah, so you can see here's where we were at then, right? Okay, but this is where we're at now, and this is probably more representative. I can't talk, but represents better where we're at here now on the daily chart. So again, we're wave trend at extreme, bullish divergence, MACD cross, right? Look at this fucking bounce, God. Now, I'm not saying we're going to get that big of a bounce, but we could. So we need to be prepared for that, even though, all I would really say is don't go buying a ton of long-term stocks right now because you're probably going to get a better price on them 3 months from now than you will today, and I would, or 3 to 6 months from now than you would today, in my opinion. Um, but if you're going to swing trade some stocks, not a bad idea to get in right now and play this little bounce over the next week, 2 weeks, 3 weeks, something like that. Yeah, we'll see. We'll see how things go. See how things play out. Because the caveat to that is that we have a big Fed meeting, and if they are extremely hawkish, then the floor can fall out under this thing, because this thing has been propped up for a long time now, on hopes of a soft landing, on hopes of rate cuts. And, if the news is delivered that, hey, that ain't happening, this market could react in an extremely bearish way. And, basically everything I just said about that bounce could go out the window. It's important to keep an eye on that, and we'll be watching that closely here on Wednesday, and listening to Jay Powell's comments on Wednesday. We'll be glued to. I don't watch every Fed meeting, every press conference, but my eyes will be glued to this one, as will tons of others. So that's where we're at. I don't want to drag the video on any longer. I think I give a pretty good analysis of what to expect. Now, the other thing I do want to point out is, again, if you are day trading, if you watch my Q trend videos or any of the videos, one thing that I like to play is to play the longer trend against the with the shorter term trend. So what I mean by that is, when, again, we're back on an hourly chart, right? So when our hourly chart is bullish, then I would look to only play calls, or heavily weighted toward calls. Okay. And the opposite when we are selling off, when we have a sell signal and we are bearish, then I would look to, again, even day trading, I would look to likely only enter puts when we're selling off, or only play puts. And if you guys are struggling with your trading, take what I just said to the bank and take it to heart, because it's gonna completely change your outlook and your results. Because, I mean, think of it this way: if the wind is, this is probably a bad analogy, but I'm going to roll with it. If the wind is blowing to the south and you're pissing to the north, you're taking a piss to the north, you're going to get pissed all over yourself, Okay. So wait till the wind is blowing, in the other direction, or piss in the direction that the wind is going. So you don't get pissed all over yourself. It is a good analogy. So same thing when you're trading, right? So if we're in an uptrend and you're buying, we have a buy signal, then why are you pissing in the wind and trying to play puts? Maybe you can play some lotto puts here and there, but you want to be playing calls, during the while we're ripping up. All right. Now, when this flips to sell here, remember, we're waiting here soon, expecting over the next maybe day or so, we're gonna probably start to sell off a little bit at some point, right? Then when you get that sell off, then you can go heavier on puts and trade puts. So make sure you're pissing into the wind is what I'm getting at. So anyways, that's all I got for now. Appreciate you guys watching. Again, make sure you smash that like and subscribe video so you don't miss any of this content. And appreciate you guys watching.